All right. Good afternoon, everyone. I'm so glad that you could join us for this presentation on today. My name is Elcorese Brown. I am the owner of Charis Business Solutions, which is an accounting firm here in South Carolina. I have actually started out as a client of the Small Business Development Center. So these are some really good guys to be in connection with and get to know. They're very helpful in many different areas. So I'd always consider them, even today, a resource for information as well as support. So as far as myself, I am a native to the Low Country, and I have done a few projects with the Small Business Development Center, but I do help small businesses in the way of bookkeeping, accounting, and tax advisory services, okay? So let's go ahead and get started. Oh, also that little QR code that you see there, if needed, would be a means or a way to get in contact with me if you had any additional questions outside of today's presentation, okay? All right, let's get, welcome everyone. We'll be, of course, discussing the essential procedures for accounting for small businesses, okay? And we'll be talking about some best practices. We'll be talking about maintaining tax records and things that you should be on the lookout for on your balance sheet, your profit and loss, as well as your accounts payable and accounts receivable. So this is all about the importance of proper accounting and bookkeeping for your small business. And some of the best practices we'll be discussing would be managing your cash flow, financial reporting, your tax compliance, access to financing, controlling costs, legal compliance, budgeting and forecasting, and also separating business and personal finances. Now, this best practice, managing cash flow, is super important because it lets you know where your money is coming and going. And then that can also aid in helping you make the right decisions, whether it's a product that's not selling or you saw that the products or services that you're selling are not really profitable. You can decide this may be the time to make a change, whether you're adding something new, whether you're getting rid of something, or whether you are maybe going to consider a sale to either promote business or sell product that wasn't selling very well, okay? And financial reporting, this is an essential practice because you'll need this as you become seasoned in your business. This is a function that enables the preparation of financial information, which would be reports that talk about the cash flows, the profitability, and the overall financial health of the company. One of my favorites, tax compliance. Tax compliance is essential. It's essential for small businesses so that they are able to fulfill their legal obligations. This process contributes to public service and also gives the small business access to government support. This tax compliance also, it maintains your credibility as well as ensuring accurate financial reporting to avoid costly penalties and audits. And then also you want to make sure that you're filing timely because the penalties are very exorbitant and they're very rarely forgiven. I'll say that. So good bookkeeping and accounting practices, it gives you access to financing. It makes you eligibility for any loans, grants, or tax credits that may require clean records and up-to-date filings. Another best practice for accounting for small business is controlling the costs. Cost control helps you reduce expenses, allocate resources more effectively, and improves profitability in the long term. Now, we're going to have some examples of this a little later on in the presentation, but this is a way for you to really see where the funds are going when it comes to things that you're not really seeing every day, like leaving the electric on overnight, or things that are just waste of resources that can be changed just by simply unplugging the coffee machine. You could save like 15, no, it was 5% the last study I did on your electric bill. Just unplug, like if you're closed for the weekend, why would you leave it on? Let's turn it off and maximize the maximize the reduction of unnecessary expenses. And good business practice is to stay within legal compliance. Legal compliance protects the business, it protects its owners, it protects the employees and customers from legal liabilities. So things that you want to keep in mind are, if you're hiring an employee, make sure you have a 1099 form, make sure you have a W-4 form. I said that backward. For 1099s is for your contractors, and for your employees, you want to have your W-4 on hand. You want to also seek to make sure you have proper guidance when it comes down to workman's compensation. These are some of the legal compliances that you want to consider in your record keeping and accounting for your business. Now, another good practice is budgeting and forecasting. What this does is it helps you plot the course. It sets the targets and plans, all while forecasting uses real-time data to project realistic expectations and make adjustments along the way. And so I try to share with others, you want to probably likely do your budgeting quarterly. That way you have time in the year to make adjustments. You have time to pivot another direction because you've seen what the last 3 to 6 months has produced. And this one is super important, separating business and personal finances. Now, what this also does is it protects from potential legal issues and penalties arising from commingling of funds. And essentially, commingling is you're mixing your money. And also what that does for you legally is it reduces your protection as a business owner. This term is generally called piercing the corporate veil. And it's not often that it happens where someone could come after you for any type of litigation. But if you are intermingling your money, and this were the case, now not only are your business assets in jeopardy, your personal assets are also in jeopardy. And they would have a legal ground per se to consider interest in the personal assets as well. Another great business practice is tax records. You must set this up. You must maintain tax records. This prevents potential legal issues and penalties arising from non-compliance. At the very least, what I would say is keep your receipts and files by month. So if you needed something, you could find it, okay? Get those records out of your truck, get the records out of the van, because the sun fades the receipt and it is no longer a valid document. What you can do, you can take pictures. The IRS does accept images of documents and receipts, electronic copies, things of that nature. But for those of us who are maybe in the trades and you're going out to Lowe's or something like that, or Home Depot, I'd also set up an account where they're emailing you records of what you purchased, what you've returned, so that if it ever came a question of, is this an expense that's tax deductible, you would be able to at least refer to your documents to be able to say, okay, I have these expenses, these are deductible, so I'm going to put these here, okay? And also, I'm going to say that so we get to some examples, and that way you can see in the numbers what what I'm showing you and how we can kind of visualize the need for these certain things. All right, so now everyone may or may not know that your financial documents would consist of the balance sheet, the profit and loss statement, your statement of cash flows, which I believe I have missing from this presentation, as well as your accounts receivable and accounts payable. Now, on the balance sheet, this is talking solely about your assets, your liabilities, and your equity. Assets are anything that the company owns or that they can liquidize in order to bring in more cash. Okay. And then, of course, your liabilities is exactly the opposite. It's what the company owes. If it's credit cards or if it's loans, I want to say a mortgage on a building, things of that nature. Those are the liabilities. Okay. Now, one thing I want to also add in regards to assets are your equipment, your trucks, your large purchases. Those are considered assets and they need to be recorded as such. If they have a value of over $2,500, it is not an expense, it is an asset and needs to be put on the balance sheet to record the depreciation over time, whether long-term or short-term. And just to define, long-term is more than a year, and short-term asset is something that'd be used up in less than a year, okay? Now, I want to get to another part. Oh, I almost forgot. You guys see the circle that I have that says undeposited funds and the amounts there? If you're using accounting software, which is helpful, these are some things that you want to look out for on your balance sheet. It's called undeposited funds. If you use QuickBooks, you may have seen it. It also is called their funds for deposit or payments for deposit. If you have any balance in this category, it's likely that you have duplicated your income. And what that would mean is your income is overstated. And that also would mean you'd be paying more in your taxes if it were a tax situation where you had a balance. So categories in your accounting are very important, okay? And I'll show some of that when we get to another financial statement. And this is another thing that I wanted to show on the balance sheet is that if you're seeing negative numbers, you want to dig deeper. If you see negative numbers in your balance sheet, the only numbers that should be negative on your balance sheet are credit cards, owner's equity, which that just talks about what the owner either put in or took out of the business. And then also, if you had like loans for vehicles that needed to be depreciated. Also, your payroll liabilities would be here. And the reason that that is that depending on how you are processing payroll, it can end up on the balance sheet or the profit and loss. Now, the liabilities for payroll is essentially the funds for the taxes and the obligations for payroll have not been taken out, but they've been set in this account because the business owner pays them. So if you're having questions about, well, how should I be processing payroll? You want to get in front of a professional, okay? If you have a payroll software that is processing your payroll for you, you can then say, you know what, I want you guys to pay the taxes. That way it washes your hands of it, and then you can reconcile in the reports at the end of the month, okay? Now, the profit and loss statement, this is, of course, your income and your expenses, but some of the things I think are important is to watch out for the categories because there are oftentimes amounts that come through your bank that are almost identical. The amounts can also be identical. And you don't want to overlook that because here's the thing. In your expenses, when you're filing your taxes, different expenses have a different percentage of value when it comes to the deduction. So, for example, you don't want to have, I'm going to just make something up. You don't want to have your waste disposal in a place where it might just be contract labor or something like that. Reason is, one, the percentage value is less. So you want to claim what you can at the highest rate if it's applicable and legal, okay? And so it's very important to watch out for where your categories fall. You want to create a chart of accounts so that you would be familiar with what's coming in. And that way you know, okay, these are all for travel. This is all for fuel. This is for my contract labor. This is for the window washer or whatever it is. Because it just depends on your business and what you need to be recording within your business, okay? Another thing that I failed to mention is cost of goods sold. Now, this is important because some individuals sell products. So they purchase products at a rate that is either a merchant rate, a wholesale rate, or things like that. Your cost of goods sold are what it costs you to create the product and put it on the market. Oftentimes I see money left on the table because you're guessing at what you're going to charge for your t-shirts or your ice cream cones when you left that out the fact that you pay taxes on that money if you didn't get a wholesale discount. You had to have a machine installed. That's a part of your cost, and that helps you also figure out your pricing as well as what is deductible as an expense or a cost of goods, okay? So those are expenses, but they are different. They fit differently, okay? Now, I wanted to point out in your profit and loss statement, and most people do know this, but it's a presentation, so I want to share it. As far as your total income that you see on your profit and loss statement, that is not your best number when it comes down to what all happened, okay? This is what came into the business. However, what's your bottom line? What do you have after your expenses? Also, I want to point out negative numbers on your profit and loss statement. You have to look into that because there should be any negative numbers. The only negative number that I would say is okay is the discounts given. And you want to record them when you give discounts because, well, let's go back. You want to record this when you give discounts to clients because this is considered an expense, a way of marketing or customer satisfaction that when it comes down to, say, your obligations tax-wise, then it's a benefit to you if you gave or you recorded it. Because say you gave everybody a discount and by the end of the year, it's $5,000 in discounts. If you don't have that recorded, then you earned you can't say, well, this is money I lost, or this is money that needs to be recorded. You wouldn't have a way to show it to be able to take advantage of the fact that you did give discounts. And this little number down here, this one is what I call your bottom line. This is the net income after that $10,000 came in and you paid for gas and you paid for equipment rental, you paid for materials, you paid for accounting, you paid for meals and entertainment. So this is the bottom line. This is where the rubber meets the road, right at that net income amount, okay? And if you have any questions or you look at it and it says it does, I don't know if I think I made more than that, then you need to look at these numbers and see where did it go? What happened? Because this is how you know the financial health of your company. This is how you know I need to make some changes. These reports are what tells you which way to go or plan the direction for your company. Okay. Accounts payable. Now, I'm sure everyone is familiar, but again, there's a presentation, so I'm just going to share it. The accounts payable are your bills. This helps you to manage cash flow based on what's due. So if you have a vendor that you purchase product or some kind of service from, and they give you terms, you can utilize those terms to your advantage in two ways. You can either pay it early and there's a discount there, usually a small discount, or you can hang on to the money and pay it right at the due date. Now, if you're having any challenges, communication would be key in this area. I would rather be calling my vendor versus my vendor calling me, okay? And so this is the area where you can see where if your bills are, right on schedule, or if they're starting to fall behind, or do they coincide with the terms, things of that nature. This will tell you what's out there that you owe and how you can decide how you want to manage making those payments to your vendors, okay? Now, accounts receivable. That is the money that is owed to you. You never want to see 90 days. You never want to see over 90 days. And the reason for that is the longer you go with someone owing you, the less likely it is that you may get paid. So you want to be on top of your accounts receivable. I know you don't want to be the bad guy, but you have to remain professional and let your customers or clients know that there's a bill out there. How would you like to take care of that? There's a bill out there. Are we paying? When are you paying that? Did you need any type of arrangement or anything? Because if you don't, it'll just go out farther and farther, and that's going to give you bad relationships with individuals who owe you money, and it's discouraging. So I would say I'd look at the payables and receivables monthly. If you don't care to contact your customers or clients, have your bookkeeper do it, have your accountant do it, have your admin person do it, because of course you're out running the business. So but there's times when you need to sit down and look at these numbers to be able to really make a good decision about what your next move is, okay? So, in summary, the things that you want to do to be successful in running the accounting for your business is you want to have separate personal and business bank accounts. You want to ensure that you are in compliance with your taxes, because this is going to save you money in the long run and also make you eligible for different types of access to financing, whether it's a loan or a grant or what have you, okay? You want to also be recording and just keeping up with your receipts. I always say if you do it by month, your bookkeeper or accountant can figure it out, or if you're solo, you need to kind of keep a tighter rein on it so that until you get to a place where maybe now is the time to take an accountant or a bookkeeper, okay? So keep those records monthly. or even if you did it bi-weekly, something like that, if you're running things solo, okay? And that way, and then you always want to have like, I always recommend putting it in an electronic file. So if you had to send it somewhere for any type of verification purposes, it's there. You're not looking around in the car for the receipts. You're not trying to figure whatever. It could even be held in an email, though that's not my favorite way. But set up a drive, a Google Drive, and that way you can put all your bills in there that you know that here's my obligations, I purchased these expenses. So when you get to your tax preparer and they say, okay, because they will give you a tax preparation checklist that's quite lengthy because they need all the information that you can give them in order to file properly for you. Now, if you don't have this, all they can file is what you give them. They will not dig around and wait for you to say, well, I think if I check over here, I'll get back to you with it. That delays the process. That takes time away from what you could be doing. So I would prepare along the way, okay? Also, decide on your tax entity as well as your fiscal year. Some start their business in the middle of the year. That's fine, but you want to decide when that time is. Also, you want to decide if you're going to be cash or accrual accounting. Cash is the expenses and the income is recorded when it is received. And accrual is when you're recording the expenses when you're when you create that invoice, that's your income. Rather they paid it immediately or you gave them terms. So that's something to think about as far as the tax situation. An example of that is you do a service for a customer and you buy a very large piece of equipment at the end of the year to do the job. And they're probably going to pay you in January, but they want to put it in December. Example. If you put that in December, you have to think about the tax implications for you because it's saving them taxes on their money, but you bought that piece of equipment and you earned the income. But if it's in December, that's going to spike your income. So you want to talk to an accountant about things like that so that you know when to say, yeah, I can wait until January, or I can wait until, for situations like that, I just want to put it out there. So yes, let's see. What else did I want to share with you about the tips? We talked about the bank account and also the reconciliation of your books. Oh my gosh, I almost forgot. That's so important because that helps you see exactly what happened. It tells you if something was entered twice. It tells you if it's in the wrong category. So that's the reconciliation process where you're at the end of it all and you're just kind of going through to make sure it is as you remember, because you're working along the way and you're providing service or you're selling products. But you want to look at those numbers because if you see something that is unusual, then you can address it and make the necessary changes. It could just be a wrong category. It could be that your service provider charged you twice. But if you don't look at that, then you wouldn't know. And so that's what I have for you today as far as the basics of accounting for small businesses. And I will gladly take your questions.
Thank you, Elcorese. If you would like to type your questions into the chat box, that would be wonderful. So let's see what we have so far. All right.
Okay.
Fate Wilson, when an owner's draw is made, how should it be classified within your expenses?
So an owner's draw is just that. It is money that the owner took from the company. This falls under equity. So Whenever you see an owner's draw and you're the person that's doing the categorizing, it's going to fall under equity under the balance sheet of the books. You also, if you brought any money into the company, say you said you're gonna take $1,000 from your savings and put it into the company, that is an owner's contribution that goes towards the equity.
Thank you. The next question from Lindsay Mays. How do you log a discount in QuickBooks? Oh, excuse me.
So
they're
in
coming
Quick,
quickly. Wait
I'm
just a
sorry.
second. How do you log a discount in QuickBooks and the
Okay.
category?
Yes, so you want to go in there and create an account in the chart of accounts so that there is, and then that there's so that there's an item in order for you to select. So if you decide first time customers get a 10% discount, you can add that to the invoice but you have to create it in the chart of accounts first. And then it would be considered like a service item. It's not a taxable item. It is just the discount by percentage, or you can choose a number.
So the next question is from Angela Thorne, and I'm going to answer a piece of this. For a very small part-time business, do I need to file taxes separately? Of course, if you're selling retail items and you're charging tax, then those taxes must be paid to the South Carolina Department of Revenue. But I'll let Elcorese go on more about the business taxes.
Okay. So if you are, I'll say sole proprietor, and it's just extra income for you, you want to include it as a part of your income. Reason I say that is there might come a time you want to purchase a big ticket item, let's say a car. And if you're not showing that income and you fall just below different types of qualification standards, they're going to say, or even a house, they're going to say, well, you're going to need to bring that income up. And then you'll say, but wait, I have a business that's part-time. Well, now you need to show that income. What will you have to do? You got to go in and file the taxes or file an amendment to your taxes to show the income, which will also, I'm gonna call it a snowball effect because it helps you and hurts you if you don't do it.
Thank you.
Mhm.
So Susan Ostium, at what point does a business decide on their fiscal year? Is this decided when filing with the state for incorporation? Why would a business choose to start their fiscal year in the middle of the year? Well, I will make a comment. The state of South Carolina fiscal year is July 1 to June 30, and the federal government's fiscal year is from October 1 to September 30. So a lot of government entities do not work with a calendar year. They have a different fiscal year. But as far as businesses deciding their fiscal year, Elcorese, can you explain some of that?
I would agree with you 100%, especially if you have a nonprofit organization. Now you can choose, it's just that you would be filing part year. If you say, well, I want to do calendar year, there are options where you can choose, and then it's that you're just in business from 6/30 to December 31, something like that. So there are different options there. You just would want to talk to a tax professional to ensure the right option for your tax situation.
Elcorese, could you please put up your first slide again? Fate Wilson is asking for the
Oh,
QR code.
no
So if
problem.
you
Give me
could
just a
share
second.
that. Gregory Pollock, what measurements do you take when a customer does not pay for the work you did? That is somewhat up to you. I mean, I know a lot of businesses put in penalties for late pays. But Elcorese, do you have any suggestions on that?
I do. Now, that would depend on the business and what you did for them. I would do one of two things. There's mediation or small claims. And then also and in the case of I would say a larger ticket item or job, there is a potential for you to go and place a lien on property because you did the work and you didn't get paid. It's just, but that's where your records have got to come in to stand beside you, because they can, you know, in mediation or even disputes, there are consumer rights to consider. So that's number one for things like that, is keeping the records. If you showed up and they didn't let you in, or if you said your appointment time was this and they kept missing, and you just couldn't get the job done, you have to document that. Now, if you were supposed to show up and you didn't, they have a leg to stand on. And then you could also consult an attorney or a legal professional to give you more in-depth advice on your specific situation.
Elcorese, isn't it very important to have clearly defined payment terms and penalties on your invoicing?
Absolutely. This is business. This is not a friendship. I understand you want to make people happy and you want them to give you outstanding reviews. However, it is super important to state what your expectations are when it comes down to the business, the payments. If you say, well, you know what, if you're gonna go over 15 days, this is the percentage of a late fee. If you're gonna pay early, I'll give you 2% discount. You want to figure that out. And even if you're making a change in the middle, you want to notify your customers and clients by either sending them an email, putting a postcard in the mail and say, hey, we're making some changes. Our new policy is, and that way there's no dispute about a late fee because you let everyone know that there's been a change in the policy.
So, Patricia Anderson, if you use the cash basis of accounting, do you still need to capitalize and depreciate equipment that costs more than $2,500?
Yes.
And then the last question is from Perry Thomason. Are there templates for profit and loss sheets?
Technically, no. But if you are, one thing that's helpful is accounting software like QuickBooks Online. That's pretty much what we use at my firm. But if you don't have, or you don't feel like you have the resources to operate it, or, you know, if it's challenging, bare bones minimum is get a spreadsheet, Excel or Google Sheet. You want to put in what came in from what accounts, because sometimes business owners have more than one checking or savings account. You want to write down what you have on your credit cards. You want to write down the interest. You know, you're going to line item all of that stuff out as you work, and you want to do that on a regular basis so that it doesn't get away from you. So maybe that could be your early morning task or your at the end of the day task. Whatever you choose, as long as you're keeping up with it, because it can get out of hand pretty quickly. I think that the accounting software is helpful for those business owners who are on the go. If you're always traveling, if you have a crew, if you have just multiple transactions, especially if you have a store, you could sell 1,000 keychains in one day. So I'd consider getting some type of accounting software. Now, QuickBooks isn't the only one around there. I just think very highly of it. So you have a lot of options.
So Tiffany asked, what is your advice on setting up employees' income? We don't have employees, but are considering hiring.
So I would, when you're in that process, you think about what it is that you would want to offer an employee. Like, are you considering benefits? Are you considering health insurance? And then you can also, oh, and make sure that you have some kind of workman's compensation going on, especially if they're out working or handling tasks on behalf or representing the company. Okay. And so if you're not certain, you can decide, you know what, I'm going to call a payroll company. QuickBooks has a payroll company. Gusto has a payroll company. Square has a payroll company. And they will offer services within their company that's going to help you with what we call like human resources, HR, different types of rules and regulations like that, so that it's off your plate, it's being handled by a professional, and it's getting done, and you can bring your employee in. Also, one thing I want you to think about when you're hiring an employee. If you are doing services that require you to go into other people's property, you want to think about a background check. I cannot stress this enough. I have seen my clients have bad experiences because they liked the person and they thought they'd do a great job, but things happened, okay? Also, you want, if you have a person who's driving for you, get a driving record. It's not that you don't trust them, but you must verify, because ultimately you, the business owner, are responsible.
And of course, Tiffany added to that, and or setting up your children as employees.
Okay.
Elcorese, can you give a little breakdown of what the IRS distinguishes between a 1099 and an employee?
Absolutely. So an employee is someone who is working within your company based on your rules, your equipment, your schedule, and your tax structure and such. A 1099 is a contractor. This person comes in and pretty much does a service for you. They are responsible for their taxes. It's as though they are a business. So they are responsible for their taxes, their equipment, their schedule, and the like. So that's a bit of a difference. And then you can't really, I won't say you can't tell them when to show up, but their rules are less strict. You have way more responsibility with an employee than you do with a contractor. But it you want to think about that also, because you also lose the benefit of having employees, because the government gives you credits for having employees. And so you want to just kind of like think about that and get the good balance. I always say, talk to an accounting professional, a human resources professional, where you can make the best decision for your business.
Thank you. I just thought that that might be helpful to add that information on with this
Yeah.
this question.
Yeah.
Are there
And
any more questions today?
I saw one about hiring your children that went
Yes.
by. I didn't answer that, did I?
No, that was
Okay.
an add-on to the considering hiring from Tiffany. She said, and or setting your children as
Yeah.
employees.
And when you set your children up as employees, they have to have their own direct deposit in their own bank account. And then that portion of their pay up to, and I believe in 2024, it is 14,600, if I'm not mistaken. You can pay that to your children employees up to that amount. After that, then it started to be like, okay, this is what their tax obligation will be. But they have to be on payroll, not just, I'm going to give my daughter or my son some money for helping me out.
So setting up payroll with social security numbers and all of those things.
Yes.
Okay. Are there any other questions today? Well, if we don't have any other questions, I want to thank Elcorese very much for her presentation today. It was most helpful.